Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it blind eye no more. You've heard the phrase turn a blind eye means basically to ignore. And I'll tell you, since the end of March, it's almost like the market has just been ignoring reality. It's like it's been looking away and either not wanting to see what was really going to be happening, or maybe there was a lot of, not believing the Federal Reserve. And, talk is cheap, and the Fed talks a good game. And as we know, a lot of times the Fed's backed off. But I think what happened this last week is Powell kind of reinforced what's on the table for the next Fed meeting. So I don't think the market's is going to turn a blind eye anymore. That's why I call it blind eye no more. And the market really kind of reinforced that with what happened here this last weekend, especially on Friday, with the Dow down 981 points. All right, we're going to take a look at, of course, the side-by-side like I like to do with the Dow, the S&P, and the Nasdaq weekly views. Take a look at the Dow versus the transports. And the transports on a weekly scenario actually are showing an interesting picture. We'll look at that. Look at the Elliott wave count on the Dow Industrials and take a look at one of the indicators. I'm going to look at the crypto ETF. I think they're ETFs. Actually, that's what I call them, ETFs. Ethereum and GBTC, ETHE and GBTC, the high yield bond fund, and then what happened with three stocks this week in terms of the earnings release, and we'll talk about that. Okay, so here's the side-by-side picture. The Dow, it was, let me find my notes here. Down 640 points for the week, the S&P down 121, and the Nasdaq Composite down 512. So the Dow's been kind of dilly-dallying around and just kind of lagging everything else. Of course, the Nasdaq, with all the tech-heavy influence, has been leading to the downside. The S&P starting to play catch-up, and here's the Dow now. When we look at the Dow versus the S&P, now, again, Dow versus the SP, sorry, Dow versus the transports. The transports really, as we talked about a few weeks ago, and by the way, I did take last week off. It was Easter weekend. Decided to just kind of take a break from the video. And the 2 weeks ago, I talked about that we were approaching a turning point, and I really think we got there. We're struggling to burst through the long-term trend lines on the interest rates, but we are nudging higher, and I think that's affecting everything. But look what, we talked about what the transports were doing and the dramatic waterfall type of move that they made, and then we got this snapback. Not totally unexpected as far as they stretch that rubber band. You stretch a rubber band, it's going to snap back. And we got it. We got a retracement. It got it really right into the 50 to 61.8% zone, perfect retracement. And now it looks to me like it's heading south again. It's back down below the 10-day moving average. And then, of course, here's the picture on the Dow. We'll look at that closer in a minute. Let's turn to the weekly view, which I just showed you on the Dow, but we didn't look at over here on the transports. And this looks kind of interesting to me. When you look at this picture right here, it almost looks like we have, let me just kind of draw in between there. Just kind of draw it in. It almost looks like a little head and shoulders top, doesn't it? And just do this to make the line a little bit heavier. It almost looks like left shoulder, head, and a right shoulder. Now, we break that neckline, and the projected move in here is going to be down into this territory, the height of the head, and I haven't measured. Well, you know what? I could do it. I always do that right on I could do that right on the screen. I would say, if I had to estimate, a little less than 7. I think we're talking about right down in this territory, right in here, would be in my initial take on a projected move. So we'll see what happens. Okay, so that is the Dow and the transports. Let's go back and take a look at the Dow by itself. So here's the daily picture on the Dow. And this is the wave count I've got. I've got it that it's in the third minor wave to the downside. Now, whether this is minor wave or minute wave, I'm not going to call it an intermediate wave. It's just we're just not far enough along. So I'm staying with the minor for now. We'll see how the waves evolve. But look at this breakdown that we got. This is the kind of price action I expect to see in a third wave. Now, granted, this is just the first wave of the third wave. All right, so here we go. You know, this kind of move. Look what happened over here in the third wave of the first wave. Okay, and yeah, you come down a few days, got a little snapback, and then dramatic. So here we are, and we'll see what kind of follow through we get. You know, like I said, down 981 points. So that is the picture I've got on the Dow Industrials right now. And let's see, I want to take a look at one of the indicators I look at. Percent of stocks above their 10-day moving average. Here's the picture. Here's the S&P 500. So within the S&P 500, 43% of the stocks are above their 200-day moving average. Notice how I like to put these little moving averages on here, and it's the same ones I use. A very sensitive 10 exponential, and then a less sensitive 21-day simple, okay? And yeah, I've noticed that when you flip and it breaks down, it has a tendency to indicate that the trend has turned lower, and that's exactly what happened in here, okay? And yeah, we got a little pullback, a little counter trend move for a couple of days, and then that was all she wrote. Thursday, Friday, came right back down. What am I expecting? I'm expecting a washout down in this territory. We're not there, okay? And the other thing I looked at in here is where did this peak? This peaked back here April 20th of last year, and here's where the S&P 500 peaked. And it's the same kind of picture. I mean, let's take a look at on the New York Stock Exchange, we're sitting at 36%. And when we look at the Nasdaq, we're sitting at 34%. And it's the same kind of thing in here in terms of the picture between the Nasdaq peak in November and when this indicator peaked back in February of last year. Okay, so that basically is, telling you that, yeah, there was a ton of weakness starting to show up as we were approaching these highs, and now the market has rolled over and heading south. All right, I want to take a look at Ethereum and GBTC. Let me pull that up. Okay, here's the Ethereum stock, ETF, whatever you want to call it. It's got this nice long name, Ethereum, whatever, common units of fraction. Basically, it trades and mirrors Ethereum, okay? So it closed at $21.67 on Friday. And this is a weekly view. And this is what I've got in terms of the price action. I think we had a cycle wave A down, a cycle wave B with all of this overlapping waves in here. Definitely an indication of corrective activity, not impulsive bull market type of move, type of stuff. And then here we are correcting down. So I think we had, I'm expecting a 5-wave move as a part of the C wave. And right now it sure looks like we are about to break down a little bit further. And, when you go and take a look at the daily chart, here's where we are. We're right at that trend line, okay? And we got there Monday, bounced up, and here we are on Friday. We'll see what happens. All right, let's take a look at GBTC, and I'm going to blow this out and show you, again, what I'm doing with these cycle waves, and this didn't adjust very well, sorry about that. What I'm doing with these cycle waves is I'm put this in here like this to mirror what Bitcoin has done. I believe Bitcoin started trading back in 2011. And so this is my projection of the path in terms of putting it in the same kind of proportion to what Bitcoin was doing. And then here's when GBTC started trading in 2015. And so here's what I think is happening. Now, granted, Bitcoin in the fall of last year did go to a slightly higher high just in here. I think it hit like 69,000 or something. And then now, it's breaking down again. I think it got down below 40,000 on Friday. But again, it's a similar type thing in terms of expectation. To me, it looks like risk off mode. And then when I look at daily Okay. It's the same kind of picture that I'm seeing on Ethereum with this trend line in here. And we break down through that trend line. I think we're going to be well underway into that third wave. So that is what I've got on cryptocurrency. The two, Ethereum and GBTC, the Bitcoin. And let's take a look at the, well, I meant to look at the high yield bond fund first, but let's do it now. Let me just go back to the moving average view. Take a look at HYG, and this is the weekly chart, down 98 cents for the week, and for the day, down 48 cents for the day. So clearly we had this counter trend move. We've rolled back over, a little bounce in here at the end of last week, and then we just chopped a little bit, and then we broke down Thursday, Friday of this week. And then the weekly view is just not pretty. It's just confirming risk off in this stock market. And why do I have, okay, this was a head and shoulders pattern right here. Let me see if I can adjust this a little bit. It's not helping me. Okay, so this was a head and shoulders pattern right here. And I've got this big line right here because this is January, February, March of 2020, okay? And the stock market has clearly gone beyond that, higher. Well, this never confirmed that move either. Okay, so just like you're seeing the non-confirmation and the percent of stocks above their 200-day moving average, this was even earlier saying no, we're not confirming that risk-on mode. Okay, and when you look at the bigger picture of what's happened with this, I mean, this huge waterfall event that happened in 2008 into 2009, and then big strong rally, but then lower low, not confirming the high, and now we're in rollover heading south again mode. So that is the picture on the high yield bond fund, and it is basically just confirming risk off. Okay, let's see. Okay, one thing I meant to show you early on is this ETF dashboard, and this really reflects, how brutal this market got this last week. Okay, so when I started looking at this with my members this morning, all of a sudden I realized, wow, there was only 3 instruments that were positive this week on this entire spreadsheet: consumer staples, real estate, and the dollar index. That was it. Everything else was red. And the deterioration we'd seen the week before this, I think it was like 15 up and 1 down. And then here we are. And what I'm doing is I'm counting these 16 sectors. And so you see the weekly deterioration in terms of what's going on as we slowly rolled over and now starting to accelerate to the downside. But this really caught my eye. That is like, wow, it's been a while since I remember seeing something like that. So I wanted to just pass that on. Pretty brutal week this last week. All right, let's take a look at 3 stocks that reported earnings this week. Start off with Netflix. Now, of course, this got a lot of publicity when this happened because pretty dramatic move to the downside. Netflix lost 37% on the week, down $125.61. And you can see over here on the daily, it basically did again what it did back in January in terms of huge gap down in here. This is a 200-day moving average on the daily chart. Netflix, now you look at this and think, well, okay, it is down like 60-some% from the high. I mean, the highs, the intra-week high, $700.99, and it closed at $215.52. It actually continued to sell off more even after the close on Friday. And you look at this and think, well, okay, maybe I should dive in and get some of this. Well, I mean, to me, when I look at this, it's like trying to catch a falling knife. You've heard that phrase before, okay? A little hard to do. Just visualize somebody dropping a knife from, maybe 2 stories up, and then you try to catch it. Good luck with that. And, the 2008 low, so here we are sitting at $215.52. Split adjusted, the 2008 low was $2.56. The 2002 low is 35 cents. So yeah, we've lost a lot from this peak, but it's also come a long, long way. All right, let's take a look at Tesla. Now, Tesla is interesting. So this is a weekly view. Let's look at the daily view over here. We had some volatility in this. Now, Tesla ended the week up $20, up 2% for the week. The earnings report came out after the close on Wednesday. Okay, so Wednesday was a down day. So here's Tuesday. Wednesday was a down day. It closed. Let me zoom in a little bit better. It closed right here at $977.20 and opened all the way up here at 1,074.73, went to 1,092, and then reversed all the way back down to close the day at $1,008.78. And then Friday was down another $3, and what is that, $3.73. Okay, so from the day before, from Tuesday, we're down. From Wednesday's close, right before the earnings come out, we're still up a little bit, but not a pretty picture in terms of the reaction to the earnings, honestly. Okay, not real pretty. Now, in terms of a better picture, IBM, and let me see if I can pull that up. IBM closed the week up $11.69, 9%. So big move on the earnings. So here's where the earnings came out. I think that was Tuesday, and then it popped on Wednesday, continued to come up. But the interesting thing that caught my eye is look at this intra-week high over here on January 2nd. The high, 142.20. The high this last week, 141.88. So 142 is creating some resistance. It's going to be real interesting to see if that continues to hold and this reverses and comes back down or not. But it's had a good move after earnings. So it was one of three. They also killed or sold off Cleveland Cliffs out there. It had earnings on Friday morning, down 6%. So not pretty there. But coming up this week, a lot of tech stocks. And one of the heaviest earnings report weeks of the season. We have Google and Microsoft on Tuesday, Facebook, Qualcomm on Wednesday, Apple and Amazon on Thursday. So going to be a really, really interesting week. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great rest of the weekend and a great week. We'll talk to you on the next video.